What's going on, guys? Welcome back, and in this video I'm going to be going over my top 3 stock picks for the month of July. Now these 3 picks are going to be kind of focused around what type of environment I can see us going through over the next couple of months, and these are companies that I think will be good long-term picks regardless of what happens in the short term. However, I do think that depending on, say, if the Federal Reserve actually does cut rates like people are anticipating, or if the China trade war starts to, go in a more favorable direction over the next couple of months, I do think that these stocks are going to drastically outperform, assuming we get any type of, positive catalyst in the overall economic setting. So I hope you guys get some use out of this. These 3 stock picks I would highly recommend looking into for long-term plays, whether or not you are a trader or you are a long-term investor. I definitely think that these companies can and probably will outperform the majority of the market over the coming years. And I would highly recommend, if you do not have any type of exposure to these types of industries, that you would think about diversifying into these spaces, assuming that fits into your overall, portfolio risk-reward type of situation. So without further ado, let's get in the video. Alright, so now the first stock on my list is going to be Starbucks. Now Starbucks is a company that I have covered numerous times here in the channel. I've talked about going in and out of positions with it. Most recently on this channel, I did talk about when I exited my Starbucks position due to the fact that I thought that the company was piling on too much debt, and that if we were headed for higher interest rates, that would, kind of bode unwell for the company. However, when you look at Starbucks and you look at the amount of debt that they've accumulated over the past couple of years and where they're expanding heavily in China, and they're utilizing extremely cheap debt in order to kind of speed past all of their competitors in their, growth for, global acquisition. Now, Starbucks, when you take a look at their numbers, they are, growing the revenue at a pretty fast rate compared to other chains in this size, and that has kind of shown time and time again that Starbucks has an immense amount of pricing power in order to, if they're not adding in more customers, they're able to just start increasing prices without actually losing their overall customer base. So this is kind of a nice elasticity with their pricing power, and regardless of if you think that we're going to be going through, a rate cut, and you expect that, okay, all the debts that Starbucks has and the amount of interest that they're going to be paying off of it is going to be going down, that will only make this company more profitable in contrast. And also, if you think that, due to the fact that, okay, we are extremely debt burdened throughout the entire world, and if we start to go to a rate cut, odds are we're going to start to experience more inflation, because you're going to have a lot of, debt that's out there. It's going to be cheaper to get more money, so people are going to be able to start paying that back. So the only way to kind of keep everything afloat would be to start printing money in the next couple of years. And you have 2 really positive catalysts going for Starbucks in these types of environments. So the current interest environment right now, how much does it cost Starbucks to really expand? And you can get the different, price models that I can see here. And now, if I just cut a rate cut, as what some members of the Federal Reserve have been talking about, say, is up to a 0.50% basis point cut, so that means a 0.5% down from current interest rates over the next couple of months, you can experience Starbucks to become extremely more profitable. And now, if Starbucks does say we get into a, inflationary environment, Starbucks has shown time and time again that Starbucks is able to increase their pricing power and, still maintain that really high level of profitability. So this kind of goes against what my initial assumptions were for Starbucks when I was kind of thinking that, okay, if we're heading for, increased rate hikes and, a deflationary process, Starbucks will be hurt, disproportionately compared to the rest of the market. However, if we start to go in the direction that the majority of people and the majority of the market seems to believe that we are going towards in order to kind of stimulate the economy again, because again, no one, including the Trump administration, wants to be, the fault for the next recession. If we hit that point where the Federal Reserve just becomes extremely dovish and they really want to see markets go higher and higher, Starbucks will be able to drastically outperform all of their competitors and also the majority of the market. Now you take a look at Starbucks and you see that their PE, is in the 30s, higher 20s, lower 30s, and you might look at that offhand and say like, okay, this company is definitely overvalued. However, when you look at this from a free cash flow standpoint, Starbucks makes a lot of money, like hand over fist, whenever they take out a loan to expand their store size. They are still, miles ahead of the competition. And when you look at, say, their interest cover ratio, the amount of money that they're having to kind of compensate for that is anywhere between, depending on the quarter, 9 and 18 times the amount of free cash flow they're getting to cover all of that interest expense. So when you look at that from like a safety perspective, yes, their PE, which is more of a trader's philosophy, is like, valuing a company, while that might see, kind of overvalue to the rest of the market, in terms of actual business performance, Starbucks is drastically outperforming the majority of their competitors. That's why I've seen this type of stock movement over the past year, and that's just because Starbucks, everybody was afraid that Starbucks was going to try to expand into China. They were going to lose a lot of money, and while they haven't been making a lot of money, they've been, more than overcoming that kind of obstacle by only making their American stores, which is still over 40% of their revenue base, become even more profitable. So assuming you think that, okay, Americans are going to still drink coffee, you think that the, kind of environment that we're going into is going to be more friendly for debt users such as Starbucks, and you think that at all, whether there are any types of positive movements in the whole China trade war situation, Starbucks is kind of posed to drastically improve their overall margins and also improve their market cap. So Starbucks is definitely a company that I would say put on your radar and just kind of see where the stock market goes over the next couple of months. All right, now jumping into the next stock is NVIDIA. So NVIDIA is a company that I've talked about time and time again on this channel. I talk a lot about semiconductor companies, but there are a couple of interesting catalysts that I think are going to be going towards NVIDIA's direction over the next couple of months. The most recent one being that when AMD came out with their newest line that they kind of demoed at Computex and that's going to be available starting in July, they kind of showed that, okay, we're going to decimate Intel on the CPU space, and we're going to create a more budget-friendly, better performer compared to NVIDIA in order to gain some GPU market share. However, now NVIDIA is talking about releasing a Super Series to all of their graphics cards in their current lineup, and that is going to kind of replace their current price tags on those graphics cards. So if you take any type of situation into all the rumors that people are kind of speculating, which may or may not be 100% true, but it would really be the only thing that makes sense from a business standpoint, is that the non-Super Edition of all of these cards are going to get a price cut. And now if the price cut is anywhere between $50 and $100 per card, essentially, AMD's kind of surefire way to gain some GPU market share back goes out the window, because now all these cards that and AMD was kind of competing on to a 1-to-1 ratio, but it was just going to be $50 cheaper, so people would kind of gravitate towards it. Now with this new lineup, those cards that AMD is essentially on par with are going to become the same price as their AMD counterparts. However, these cards do not have ray tracing. These cards do not pretty much benefit from software suites such as Adobe and Sony Vegas and things like that. So in my opinion, the majority of people that are, looking for these high-end cards, whether you're a gamer, a content creator, or if you are, someone looking to really put these GPUs into your data center, none of the companies are going to be going for the AMD counterpart to the now lowered NVIDIA cards. So I definitely think that that NVIDIA is going to be able to maintain their roughly 22% market share, and they may even be able to bump that up to 85% of a market share, assuming that the pricing power that people are anticipating actually goes through. Now, other things is that NVIDIA is pretty much hands down the best GPU on the market that you can get. They're in the majority of companies that are kind of going towards autonomous driving, with the exception of Tesla. Pretty much every major player in the autonomous driving space is utilizing an NVIDIA GPU in all of their systems. So assuming that you think autonomous driving is going to be taking off over the next couple of years, even over the next decade, NVIDIA is going to be getting the bulk majority of that market share. And not to top that all off, NVIDIA is also the hands down #1 pick in terms of, cloud farms, data farms, and everything like that. And assuming when you think about the amount of data that's currently going into the cloud, and right now it's still less than 20% of all the data that people are anticipating migrating to the cloud, NVIDIA is going to be, kind of at their wits' end in terms of meeting supply and demand over the next couple of years due to the sheer quantity of data that needs to get transferred into these farms and also running at a fast enough speed to make people actually justify switching all of their platform onto the cloud. So there are a lot of positive catalysts that will be going on to NVIDIA. However, as you can see here, there's been a massive dip in their stock valuation due to growing trade war concerns and also slowdowns in the global economic trend. Now, when you take the fact that the Fed may or may not be cutting rates, and when you take the fact that inflation may or may not be right around the corner, semiconductor companies that, kind of offer this commodity type of product, obviously NVIDIA isn't like a commodity like say a company like Micron, because they have very specialized GPUs that drastically outperform their industry. NVIDIA is in a really sweet situation because all of their factors that they kind of push graphic cards into are expected to grow at an extremely fast rate over the next 10 years. And due to the kind of pessimism that's been with the China trade war, any time that there is a positive catalyst in that, all the pricing that is already kind of put into NVIDIA's stock price will only make it revert so much quicker. So in terms of the semiconductor space, NVIDIA right now is probably the best risk-reward type of situation. There's also Intel that I talk about that has a pretty good risk-reward situation. However, Intel right now is getting pressured by all the leaks of AMD, so I hands down think that NVIDIA is going to be the market leader for the next couple of years. And so now the third pick I wanted to go over is National Beverage Corp, ticker symbol Fizz. Now, this company, as you guys know that I've been following for a while now, has been, going through a bloodbath. You can look at their stock price here, and the company's down, north of 40% from their all-time high. And a lot of people are very, pessimistic on the direction that this company is going to be going into. However, when you take a look at the company's business performance, and you see that, okay, they are generating, a good amount of free cash flow. They are, especially compared to their peers, they are not raising a lot of debt, which they have a lever to pull in the future. If rates drop down low, they have no debt right now, and they're able to grow pretty much with the market, a little bit above the market that they're competing in currently. So if rates go down, the management could just say, buy a lot of cheap debt and accelerate that growth and make them drastically outperform all of their competitors. So that's a nice little lever to kind of have in the back seat. Not to mention that their CEO and 75% owner, Nick, is going to be, he's approaching 82, I believe. And in the foreseeable future, if he ever starts to kind of go away from the company and back off, there will be 75% of the company that can be bought up by, say, hedge funds, private equity, and things like that, that could drastically push that stock price further up. Now, obviously, this stock price has been getting beaten down dramatically over the past couple of months. However, I do think that when you take into evaluation what type of free cash flows they're generating and what the discounted cash flow model is for this that'll show here, I do think that National Beverage Corp is at a point right now where people are factoring in the worst possible state. So all that the company has to do is do slightly more than the pessimistic level that people are expecting, and the stock price will drastically outperform the market over the next couple of months. So that was it for this video, guys. Hope you guys got some use out of this. I did decide to really cut down the amount of in-depth analysis that I do in this type of video. I realized that my videos are getting really long for, the majority of viewers out there that don't want to be sitting 20 minutes per video. So let me know if you guys like this shorter, condensed version of things more. So make sure to let me know in the comment section down below if you prefer this shorter type of, condensed video. I'd really like to hear your feedback on that. I will make shorter videos if that is what my viewers want. Again, this channel is for you guys, not for me. So if that's what you guys want, make sure to let me know. And as always, guys, if you stuck around at the end of the video, make sure to like, subscribe, and I will catch you guys in the next video. Peace.